All right, traders, welcome to today's recap. It's Monday, the 8th of October, and well, we got a lot of stuff to go through. Pretty volatile day. We had a comeback at the end of the day. And yeah, we'll go over a lot of charts, a lot of a lot of different names that to go over that fell into some support for the most part. I mean, I think a lot of growth names. I'm going to talk a lot about what the headlines are talking about, growth versus value, a little bit of the bonds, just because that is somewhat, it is very relevant. It's been going on now for a couple days. It also happened a couple times, a couple months back. Right, this is a little bit more than what we saw the last time that we saw a rotation out of growth and into value. And it seems like there's more instruments that people are using too. So the one that I talked about. And you probably won't hear anybody else talk about this one if I can find it. Slide G, right? This is the small cap ETF. This was on Friday, and this was in the weekend newsletter, the Tribeca Trade Group newsletter. But I just wanted to talk about it because this is proof of what people are doing. So this is a big old unwind of this. That's again Slide G. You probably never heard of this ETF. It's small cap growth. And there's a bunch of these, right? I've talked about IWO and IWF. Those are segregated into small cap and large cap growth. We've seen that rotation out of those names before in the months. I could look at those for you. But this is IWO, which has seen a lot of volume in here and a lot of unwinding going on here. I think to a lesser extent IWF. You could see the volume here. Yeah, not as much volume. This one day, I think, is what I was talking about, as well as in here where we saw an unwind. And then the one that saw the volume, this is SPY value, the rotation out of the Slide G and SPY V. You could see the volume here on Friday. So yeah, I mean, clearly the reason why I point this stuff is because people talk about it, people look at the performance, but to kind of pinpoint the actual dollar amount, which is, I'm not going to go over this now because all the numbers are in the weekend newsletter. And the proof that it was, an outflow and an inflow is in the newsletter as well. But yeah, so clearly there's that's been going on, and really why the small cap growth gets hit much harder is because the liquidity, right? The liquidity in those small cap names. The liquidity in the small cap names is not nearly as much as the large cap names. So when they want to sell 250 out of one and buy 250 of the other, it won't have the same impact, even though it's the same dollar amount, right? All right. So what did we see today? Well, first of all, I already went through in the midday video, which I'm not going to rehash. I'm doing that for free all week, so I'm not going to send it. I don't think I'm going to send it out on Twitter, but it's on my YouTube page, so you can kind of catch some of the things that we're seeing midday, some of the option activity, and also today obviously was a little bit different because of the moves that are happening, and just wanted to go over what we were seeing in put activity. So SPY basically, we're basically holding the 50-day moving average. Yes, there's a sell signal here when we dropped below the 20-day moving average, but we got a couple hammers in here. So really buyers are coming in to support. Somebody asked me, and I do mention this almost every video because they're so important, but Virgin point of controls, I'll talk to you about a couple names where we saw those being taken out. I'll to go right into that next. Actually, I'll talk about the FANG ETF. Right. So if you're not familiar with this ETF, it's a good ETF to get familiar with. The FANG stocks are your biggest weights. And again, I've talked about, if you've watched my videos before, you know that I've talked about this several times, and I talked about this a lot last week because this was really the first crack that I saw in the armor. Was the coiling that was going on in the FDN ETF. And let's see if Bloomberg brings it up for me here. The video that I run, Camtasia, just really slows down my PC, so I apologize why this is so slow, but there you go. Amazon, Facebook, Netflix, actually sales, well, no, sorry, when you add the two Googles in here. But yeah, it's internet stocks, and it's basically your FANG proxy. But so I said, the coiling, and I mentioned this in several videos last week. I said, watch out for this thing, get out of the way. because it is tight. It's a tight coiling, and originally I was looking for the move to go higher. It went lower. I bought puts. I actually got rid of the puts on Friday. And I, was kind of kicking myself earlier because this VPOC down here is exactly where I said that I thought the price would get to. Also the 200-day moving average. So we'll see what it does here. And you're seeing this in a lot of places, right? So that's a pretty instrumental virgin point of control. So again, why is this important, virgin point of controls? Because it is where a lot of buyers and sellers have set up before. You could see on the volume profile, look at exactly, it tags exactly. So price has memories. And I could tell you from being an institutional trader how hedge funds trade is they care at certain price levels. So buyers have a memory, sellers have a memory, and sometimes price will literally seek out where there was a lot of volume before and then stop and revert. So I'm thinking that this stops and reverts here, but where I would be wrong. So that's my call, is that the damage has been done here. I would watch for a bounce at this point. Where I'm wrong is if it breaks and goes below the 200-day moving average, then you have this one to contend with. But I think that's pretty good support. I could look at, let's just look at the Qs really quickly. That hit a VPOC. It took a VPOC out on Friday. It did go lower here. You've got a bunch of sell signals in here, but we'll see how long they're going to last, right? And we know that buyers come back into these things. We could see a little bit of a bounce. I thought today, and again, I don't mind admitting where I might be wrong, but I thought we might get a bounce today and then resume going back to the downside thereafter. So we got more downside today. Hey, I would rather have us get the downside, let it play out, rather than have. I thought we might have kind of an inside day bounce today, and then it might be ugly a couple more days this week. Now I think we hit enough support that we might. Be in the clear a little bit. I would still keep an eye on bonds. So IWM, as I'm going through and talking here, it did hit the 200-day moving average on Friday. It held there. It went right back to the lows. I actually bought some IWM today in a couple different places. Was able to take a target, 2 targets on my ad in the options, but I also added it in cash with a nice easy 200-day moving average stop here, right? So this has been a pretty big decline, and you've got major support of the 200-day moving average. Yes, it has to bounce a little bit, but what better of a space to kind of put a trade on than after a big decline and into support? So I'm trying it. If we start to break down further here, you know that we have bigger systematic problems going on in the market. I don't know if that's the case, and I have a nice, I don't have a crystal ball. No one does, right? So I would rather trade against a pretty good support level. And if it breaks, then you really have to pare down some risk rather than buying the dip. And that's my call there in IWM, which again I think is very important for the market. We certainly have seen the small caps lead the market lower, and often they lead the market higher as well. So a lot of talk about the bond market being closed today for Columbus Day, but these futures are still open. Bond futures. So yes. It's I would say it's more important when the bond market is open, but you have TLT and you have the long bond. They continue to go a little bit lower here, so it is getting pretty oversold, the long bond. If you look at the RSI in the long bond, even though it went down again today, it's a 21, right? So it's probably due for a bounce, and if that happens, I would think that the tech and some of the other beaten up areas of the market will rebound. So that's what I would be watching for tomorrow. If we don't get that bounce, and maybe more of the same. What is TLT? TLT is a 23 RSI, right? So when these things get lower than 30, they're pretty damn oversold. So I would watch for that bounce. If not tomorrow, then on Wednesday. So I think I think this is good, right? I mean, I think that we're kind of putting a couple things together, saying that a bounce is in the cards for tomorrow. And then if we look at IEF, which is the 10-year, let's see what that is. That's also a 25 RSI, right? So these things are ripe for a bounce. Now sometimes they bounce and then they go back down, but I think that for a very short-term bounce, I think that's in the cards for either tomorrow or Wednesday in equities and some of the oversold or some of the areas that have really been getting beaten up. Again, I don't know what's going to happen outside of that, but I think a short-term bounce is in the works. All right, what's it go? Oh, Amazon. And I'll start to go over a little bit of today's option activity, but going back to the VPOCs, version point of controls. This was a nice one, and there was a nice June call buyer that came in. It's going to take a little bit of time to bring all these for Thinkorswim to respond to this, but we've been taking these out. If you actually zoom out a little bit, I'll show you the last one as soon as it fills in here. But this is when really good to look at not only the long-term charts but the short-term charts just to kind of see what those trends look like. So you could see the short-term trend, for example, on Amazon. This was all the way back here. This is at 2015. So here's that VPOC, by the way, just showing up on the charts. That's it. That's the last one on the 5-minute bar. Now there's some other ones on some other time frames, but that's the last one that I see for a while on the 5-minute chart. But here is where we broke the trend and basically retested it here, retest here, retest here, retest here, and we did not get over it today. So I still think this Amazon has work to do. It had a hell of a nice bounce today, still finished down 1.3%. Which gives you the trading opportunities to kind of trade, but it needs to get above this short-term trend, right? So that's Amazon. I'm not going to go over all the FANG stocks. I think Amazon is most important. That's the one that I like. I know Google's been into some trouble now. They've had some kind of security issue, I think, but I really have been second guessing their management. They did not show up for that congressional meeting that they were stated. They were a no-show on their congressional meeting, so they've got some issues going on. Amazon, on the other hand, is where I want to live. There was some short-term call buying that gave a couple names. I actually scalped Netflix very quickly today, and luckily I was not. Now Netflix has actually gotten over that 5-period moving the 200 period moving average here, but I scalped Netflix and I was not greedy. It was making a nice move. It moved right into this 200, and I said I don't know if it's got enough to kind of get through it, and I got out, and then the whole thing fell apart. And that's the case with a lot of other names too. Salesforce is a name that I love to purchase on dips. We could see what this looks like. This it may take a little bit of time. This was also a virgin point of control that was taken out today. So you've got a sell signal here, right? When the 5-period crosses below the 20, so it may need some time to kind of do this. I thought it would hold on Friday. That's basically how you trade is you've got support. If you break support, you've got to look to see where the next area is, but you also have to recognize that something broke. I mean, I have a trade that I put on Friday that is got dogged today because that support did not hold. But you do have that VPOC being taken out. So I think it's showing some promise. Also, a couple other names that I'll go through, and then I'll talk a little bit about the VIX. Visa too. These are hitting these downside levels. And I think that's good. Now, again, we'll have to see what happens. Maybe an inside day tomorrow. Maybe it gets back above value. We'll see. That would negate that sell signal. But again, the reason why I'm kind of going to these names is they've been in the past some really good names to get involved in on dips. Remember the last time this thing broke the 50-day moving average? I mean, here's a good example. You have a little bit of a playbook. It spent a few days below here. It took out, so here was another one, right? It took out this VPOC hammer bar and went back up. Now it spent some more time under here, but you got your bounce. So maybe a little bit more of a severe fracture here, but definitely a name I would keep on the list. So what's been performing well? This is a good indicator as well. In the first hour of the day, when you see XLU, IYR, XLP, all the defensives outperform, you have a problem on your hands when all these things are performing really well. IYR was another one, bounce off the 200-day moving average. So it's really interesting because I think this is tough to get your head around, because normally when interest rates go up, people flock, get out of all of these higher dividend names. But safety right now is trumping uh, the the whole yield dynamics, right? People are running into defensives right now. So a couple charts, besides value, this SPLV, this is low volatility equities. I almost put a trade on here today. I decided not to. It's got to get inside value, but that's low volatility. There's also USMV, which is minimum volatility. That's also holding the 50-day moving average. So you do have some names that are doing pretty well. The Dow stocks are continuing to hang in there. They finished up on the day, so very positive there. So yeah, so let's talk a little bit about the VIX. I think I covered the put call ratio as well today. If I didn't, the put call ratio also, just to kind of connect the dots here, that's 3 days now where we've been around 1 in the put call ratio. So there's fear, right? So Thursday, Friday, and Monday, we've now seen the put call ratio over 1. So there's definitely fear present in the market. I think the fear and greed index that was it CNN puts out is at a 28. Right, so these are the places I think to really start to kind of look and to add to some of your risk. Again, recognize where your support is, recognize what time frame you're on. But I started to add some things in cash versus the 200-day moving average today because I know exactly where the trade. If there's really something greater going on in the market, and we break the 200-day moving average, I could get out for a minimal loss. I mean, that's to me. Right? I mean, we could bring up before I go to the VIX. Square was a name that was down 10% today. But would you rather buy Square? For the long term, right? If you're looking out a little bit further, would you rather buy Square up here? When it's way above the 50-day moving average, or when it's touching the 50-day moving average? To me, I think I would take a shot at it here, and if it breaks the 50, you get out. But clearly, this is taken out this whole move that we've seen in the last couple weeks. But yeah, I mean, it's another thing to kind of. I know this is hindsight 2020 stuff, but when names get way above the 50-day moving average, if you're a shorter term, if you're not investing for the long term, you got to take targets. You may miss the very tippy top, but usually when you're this far above the 50-day moving average, usually you're kind of asking for it if you don't take, right? I mean, this has happened before. When Square got way above, big separation, right? Look at the distance between here and the 50. Here and the 50. That's your place to take some money off the table and then redeploy when you get back to the 50. So again, it may take a little bit of time for it to kind of chill out. And again, I think what we want to watch is for things to stop moving so fast. So that brings me to the VIX. You don't have to on the first day. I think that's to kind of just talk frankly for a minute. I think that's a lot of times where traders with less experience make mistakes. Is as soon as they start to see things fall, they buy. And really, you've got plenty of time. Like, if you're investing for Square long term, now you may get that bounce tomorrow if you're just looking for a bounce trade. But if you're looking for, a swing trade for a couple weeks or a couple months out, give it time. Don't rush into things. That's really where experience has helped me by not having to go all in. Again, if you want to buy it, if you want to start scaling in after a down 10% day, sure, that makes sense to me. But I would give it have the frame of reference that it may take 2 or 3 days of a down move, into support where you could actually pick and feel a little bit more confident about adding risk, not just knife catching. All right, so let's go to the VIX, and that'll be the last thing, as the video is almost 20 minutes. But I think this is starting to get revealing now. We had I wasn't completely convinced with this bar on Friday, so we're now over this, and this looks like a toppier candle. And just like we were doing with Square and a couple other charts, you could look back and you could see that these spikes in volatility, sometimes we stay in here for a couple days, but then we normally go back down. right? And we're seeing that. We saw that here. We saw that a couple days here. So this is not exactly the same as the past. Maybe we stay around this 15 level in the VIX for a couple days to see how interest rates develop. Here's VXN, a little bit higher of a move, and then RVX, which is the VIX for IWM. Finally showing a red bar there as well. This looked like when the first bar last week went over the 200, it looked like it had more to go. But now we're starting to get maybe a little bit toppy, and hopefully that's a toppy looking candle at the 200-day moving average in the IWM. All right, guys, thanks for watching the video. More to talk about tomorrow. Have a great night.